Everybody, it's Jackie Tuma here. Sorry, I'm trying to put my I'm trying to get my audio on properly. Jackie here, and today we have a very special live stream. We're coming to you with the Real Estate Empire in Africa show. This is our episode number 1, by the way, and today we have Sally Wanjiru with us, and she's got such an amazing story. I just, when I talked to her, because we're discussing about working together, so when I talked to her, I was like, we need to get you on to talk to other diaspora investors like you about how you've been able to do the things you've been able to do, some with funding and some bootstrapping. So you guys are in for a great treat. Okay, we'll just jump right in. And actually, as you guys come in, if you catch this live, please put your comments and your questions that you have for Sally down below. And in case you have, questions later and you don't catch the live stream, that's okay. We're going to be here. We'll be answering your questions through the comments, so do, even if you watch this later, do definitely put this down and take some time right now to share this with your contacts, with your connections, and put hashtag the Real Estate Empire in Africa show. Okay, awesome. Let's get started. So Sally, welcome. It's good to have you.
Thank you very much, Jackie, for having me.
Awesome. It's really good to have you. I know we've been talking about doing this, and today being a Sunday, I'm like, what better day? Because everybody is at home and chilling, and they can catch they can just jump on whenever they're available. But yeah, there's a couple of things that maybe we could start off by you just sharing with us, Sally, who are you? What's your background? What do you do? Where are you based? That's really great background information that everyone would love to hear.
Okay, so I'm a qualified accountant by training, and I have been working in taxation. So I specialize in international tax, and I'm currently based in Dubai. Before Dubai, I was based in Tanzania. Yes, that is pretty much my background. Accountant, working in taxation, international tax.
Okay.
And based in Dubai, investing in real estate on the side.
Awesome.
Yes.
That's really good. Great to have you on, Sally. And yeah, like I said, we had this conversation with you, I think, was it a week or 2 back, discussing about you coming to work with us to get some of your investments, cash flowing in a higher way, like high yield, what we talk about, the high yields, cash flow. So, but I really love your story because you talked about how you have, you've been able to invest in Kenya and you've lived abroad. But how many years have you lived abroad?
So I left Kenya the first time in 2013. Moved to Tanzania for some 2 years. So we could say it's 8 years now.
It's 8 years now. And would you say, so all your investments that you've done, have you done those when you've been abroad, or did you start when you're back home?
No, I started when I was abroad. My first property, I got it in 2014. And then the second one in 2015, and then 2017 and 2018.
Wow. So that's basically, it's like almost every year you are actually investing in something. And I suppose some of them were bigger, some were smaller, right?
Yes, different sizes.
Yeah.
And yes, I was trying to do it. My goal was to do a property every year. But of course, it takes a lot of cash. And sometimes when you go into an investment, it doesn't always work out the way you want it. Some take longer to close.
Yeah.
I remember like the mortgage, I started the process sometime in April, and we were only able to close in October.
Okay.
It's months of back and forth. Yes, so it depends a lot on how you're going into the investment, where it is, and who is involved in the transaction.
Yes, it's so true. By the way, when you're actually going into mortgages and a few other things, it actually takes much longer than one always plans, isn't it? Like you always see that you end up spending more time, but it's still worth it at the end, isn't it? So tell us, break down for us your investments, the investments that you have currently. Like, you started with the one, and I think you mentioned four different investments.
So one of them is not an investment. One of them is occupied by family.
Okay.
So I wouldn't call it an investment because it is not bringing income. I look at investment as something that brings in income.
Yes.
So my first investment, I would say I came to it by chance. Because what happened, I had some money and I was talking to my banker and I wanted to invest in a corporate bond that was going live at the stock market around the time. And he talked me out of it and told me, this is a corporate bond. It's different from the government bond. So with the corporate bond, there are additional risk. It's not like the government where we say the risk is zero. The risk of the government defaulting is very low. And true to it, we have seen some corporate bonds that have defaulted. So I told him I have some money which I don't want to continue sitting in the account because it's not earning me anything. And he told me there are some properties that we are financing people. Why don't you check them out? Now, I had wanted to go into property. And by the time we were having this conversation, I had gotten some land and even started researching on construction.
Yes.
But when I was given the quotation for the construction and the fact that I was out of the country, I didn't have anyone to supervise for me the construction work and all. So that slowed me down. So when the guy told me there are ready apartments that we are financing people, I said, if the bank is financing it, it's good. The bank doesn't put money where it doesn't believe, where there are issues.
Yeah.
If you want to know, sometimes you can gauge the quality of the property by which bank is financing.
That's
So
a really
based
good
on that,
insight, actually. Yeah.
yes, because what I have noted, I have banked with Standard Chartered for the last 12 years now. And what I have noted, Standard Chartered doesn't go for every customer. They are very picky. They are very picky with their customers. They are very picky with what they finance.
Yes.
Which minimizes their risk. And it's unfortunate because I remember the very first time we interacted with the Standard Chartered team, my colleagues and I were like, these people have a superior product, but their marketing team is doing them injustice.
Injustice.
I
That's
later
so
came
true.
to understand Standard Chartered is not the bank that brings itself to you.
Yes.
They will tell you we have this, but they are not enticing you. They are not playing that game of enticing you with offers here and there. They will tell you this is what we have. If you feel like it's interesting, you walk to them, and then we started
So a lot of
meeting.
people miss out, isn't it? A lot of people miss out because they never even
Yes,
hear about it.
because
They don't
unfortunately
follow.
they're not on your face.
Yeah, that's the thing. Standard Chartered, if you're listening, you better step up your marketing game.
I think it's their strategy because they say the other day they were launching the digital lending product and they said we're not going for everyone. We're going to steal our customers. We are keeping our segment. But anyway, so when he told me about the project, believe it or not, I walked out of the branch. I didn't have a car and I hopped onto a matatu. The property is in Syokimau.
Okay. That's for those who are not in Kenya. Yeah, it's right. It's just
that is
after
near
the
airport.
Airport, exactly. Just
Actually, from the apartments, you can see where the train station is, the SGR station. You can see it from the apartments.
The Standard Gauge Railway.
So at the time, that place, it was a construction site. It was so dusty. The roads were partially done, but I went and I liked the property.
Yeah.
And I walked back to the bus stop knowing that I was coming for that property. So I spoke to the agent. I asked them, what are the terms?
Yes.
And they gave me the terms. But before I went to Standard Chartered for the financing, I spoke to my friend and my friend said, that property, given the price and given the saving you have, I don't think it's wise to take the mortgage route.
For it. How much was the property?
Buy that
it was going
property
for
cash. It was going for 4.2 million.
Which is about 42,000, yes. Dollars.
Yeah, if we
Dollars.
convert it today, it's 42,000.
Yes.
So, and he said, now, if you take a mortgage for 42,000, at the time I would have been paying around $750 for that mortgage.
Yes.
Now, and I would be tied for 20 years.
Wow.
So, looking at it, he told me, why don't you take a SACCO loan?
Yes.
Now, for those who are not from Kenya, the SACCOs are cooperative societies where you contribute and then they lend you a multiple of your savings.
Mm-hmm.
And he told me, you already have like 50% of this cash. The transactional cost, the stamp duty is 4%.
Yeah.
You have some legal fee, and you have, those are mainly the things. If you're not going the mortgage route, you don't have a lot of these other processing fees and double legal fees.
Mm-hmm.
So I decided to go with the cooperative. So I put down the money that I had. I paid a deposit. We agreed a payment term with the agent who was selling.
Yeah.
And I organized myself with the cooperative, made my application, put in the documents, and they released the funds. So that transaction, we were able to close it, I believe, in less than 2 months. A cash transaction
Wow.
moves
Because it's
really
a
fast.
cash, it moves
A
faster.
cash transaction, you can close it because as long as you have the money ready, the lawyers move it very fast.
Very quickly. Okay.
So, and there I was a property owner.
Wow, that is amazing. So you went into your savings basically in order to buy this property.
Yes, I took my savings and the other half from the cooperative. So my
Yes.
property title is clean
Okay.
because to the property seller, it is a cash sale. So
It
the
is a
loan
cash
is
sale.
between me and the cooperative.
Yes.
Now, the advantage with that arrangement is that should I have wanted maybe to get another property or to release the cash, I could mortgage the property and now get the cash out and do something else.
Absolutely.
I
Yes.
haven't done so, but
Yeah.
that is a strategy that you can also consider,
Yeah.
where you go
And
in cash on some properties and hold
yeah.
them to use in case of an emergency or
Yeah.
something.
Exactly. And we see Olivia is saying, thanks, Olivia. Olivia that they're saying, well done. And she was just wondering where you get
Thank
the
you.
time and how whether there are any available that the banks are financing. So Olivia, what we'll do is I'll share a link at the end of this of how you can get more information. Okay, but just keep the questions coming. And for sure, I mean, Sally is amazing in the fact that within what, a year, you've just decided, okay, let me do this, let me get this property, and you got half the financing from the cooperative. I know the cooperative financing is a bit steep, the interest rate, it's a little steep, isn't it? How much is it, the interest rate per annum?
So it's 12%, but on a
12%,
reducing
yes.
balance, so the
Yes.
effective rate comes to about 8.5%.
Wow, okay. So that's good. That's good to know. And then now you have a property, and is that something that's earning you an income at the moment?
Yes, it is rented.
Yes.
So it is rented and furnished, so it's not a
Okay.
high yield investment.
Yes.
And so I make about $270 a month
Okay. Off of the rent.
of the rent, yeah.
Yes, yes, yes. But
And
remembering that you have the equity in that property, and that's amazing.
yes, and it's also appreciated. It's not appreciating as fast as the other areas, but still
Yes.
it's appreciated because the people who are selling now are doing about $57,000.
So yes, you've already gotten
So, and
about
that is over
12.
7 years, from
That's
2014 to
not bad.
2021.
Okay. Wow. So good job on that. Good job on that. So tell us
Thank you.
about your next one.
So now, having done the first one and almost clearing, then I realized I have some more saving because I went back to work. I'm paying this one, I'm making some rent. And I found another property through friends of mine who had bought into the property. They had gone in when it was still under construction. And for me, I came in when the developer was almost handing over.
Yes.
So I viewed that one on one of my visits to Kenya. At the time, I was in Tanzania and I liked it. And I left my friend to negotiate because they had negotiated with the developer. I told him, please help me get a good deal with these guys. And I got a deal. And the
Oh,
deal was on condition
yeah.
that I have to put a down payment of about 30%.
Okay, that's with direct
Of
direct
the
to the
cost of the
developer.
property
Yeah,
directly with
yeah.
the developer.
Yes.
And I explained to them I was going to the bank. They said, we understand, it's okay. We know the mortgage takes time, but for us to give you at that price. So the market price when I went in, they were talking of 11 million.
Mm-hmm.
When my friend negotiated, we came down to 9.5.
Mm-hmm.
And they said, for us to lock that 9.5, you have to deposit 30% of the property.
You know, yeah, and 9.5 million again, for those who are not in Kenya,
95,000.
95,000 exactly. Yeah.
Yeah, for ease, we
Dollars.
can just divide by 100. The rate
Exactly.
is about 110, but for ease of
A hundred
calculation,
makes
we
it
can
easy.
do with 100.
Yeah, yeah. And I think Moses was asking whether that's a flat. I don't know if that was about your previous property, whether it's a flat or standalone property. I know all these were flats, isn't it? This one you're talking about now
Yes,
and the previous
both
property were
of them
flats.
are
Both of them are
apartments.
flats. Yeah. Yeah. Apartments,
Both of them
absolutely.
are apartments.
Yeah.
So yeah, so I managed to get the 30%. Then we started the process with the bank. It took long, as I said. The delays were mainly with the lawyers. So on the bank
Wow.
side, it would move because when you take a mortgage, then the bank has its lawyer, it has its valuer, and you as the customer, you also have to appoint your lawyer. They don't allow you to deal directly.
Yes, that's
So you
true.
have an extra, you pay two lawyers. You pay the bank one and you pay your own.
It's steep. It's steep buying business. I mean, these costs do run up, but I don't know. I don't know if there's ever going to be any change in that. It's
Yes,
steep buying property.
and the other thing is, for me, I wasn't in the country. I wasn't going to be in the country full time for the whole process. And these 4 months that I'm talking about, there are documents being exchanged. This week, there's an offer letter that needs to be signed and returned to the bank or sent to the other lawyer. Next week, there's a document to be picked from the valuer to the lawyer, from the lawyer to the other
It's very
lawyer.
intensive. Yeah.
So a lot of back and forth, and how I was able to do it, I give someone a power of attorney to sign
Okay.
those
Yeah.
documents on my behalf. Now, with the power of attorney, there are two types of powers of attorney. Those who are lawyers would be familiar. There's a general power of attorney, and there's a specific power of attorney.
Yeah.
I know people are very hesitant when you hear that you have to give someone a power of attorney. But I learned that you can give someone a specific power. With a specific power, it limits their power to only that transaction. They cannot transact anything else that is outside that transaction.
Yes.
So that is the
So you
one I
can limit
took.
it just to the property. Yeah.
Just to that particular transaction, not even to the property, to that particular transaction. So I took a specific power of attorney with the lawyer, and my friend was able then to receive the documents on my behalf, sign them, and return them. The alternative would have been couriering the document from
Yeah,
Kenya to
couriering
Dubai to
everything,
wherever, which will
which
take
would be
even longer,
stressful. Yeah.
and it's also stressful.
Yeah.
So that is how we managed it. And eventually I got the money released. And for those in the diaspora, you also have an option. You don't have to take the Kenya shilling mortgage. If you want in dollar, the banks are offering mortgages in dollars. So, and the one advantage I noted with taking a dollar denominated mortgage is that when
Yeah.
we started the negotiation, when they gave me the confirmation they were going to finance me, and by the time they released the funds,
Yeah.
the shilling had lost value. So I took less dollars than I would have taken at the
Yeah.
beginning. So instead of
Yeah.
taking like $95,000, I ended up taking 86. So that reduces your loan amount.
That does reduce the loan amount. That's true.
That's an advantage as long as you're earning in dollars. It can become
Absolutely.
a disadvantage if you're no longer earning in dollars and the
Mm,
shilling is losing value and you have to buy
mm,
dollars to pay the loan.
yeah. And
But
I
when
suppose
I
it's a
looked at
yeah,
it,
it
when
still
I
worked
looked at
out,
it,
right?
for me, it was still worth it.
I hear you. There's a question there, actually. I mean, I want to just agree with Moses that that's a possible area of disruption for sure to fast track mortgage
Mm,
and lawyer process. I think they're doing it really well in the West. I was actually watching a Google for startups demo day, and they were talking about how this gentleman, one particular demo involved bringing together, letting people see all the loans available on offer, all the different loan products by different banks, and giving them a chance to
mm,
be able to choose those really fast. So that's definitely an area of disruption, I would say. Yeah. Okay. So
mm.
then you're able to at least the lawyers are the ones that delayed.
Yes,
Just a sec. I
we
have my
had
daughter
the
here, and
lawyer on
she
the
really is.
developer side was a bit difficult.
They were. Eh?
So they could sit on documents and yeah, I think we lost Jackie.
No, I'm right here. Keep going.
Oh, okay.
Apologies.
Yeah, so the lawyer on the developer side, that is the third lawyer who was taking a lot of time. Sometimes we had to call his secretary to confirm they received the
Oh
documents.
wow.
The
Yeah.
documents would sit in his office, and
Oh,
you know,
so
lawyers don't speak to
frustrating.
each other, they just wait, they just sit and wait.
Yeah.
So you as the customer, you're the one who is trying to call the secretaries to confirm where it
Oh
is.
my. It's super, super
So
annoying, to be honest. Yeah. So,
yeah.
yeah. And then the next step, I suppose, once you had the property down, and then what was the next step for you?
So the next one, the handover eventually happened. I was still outside, so my friend took the handover and we rented.
Yeah.
And unfortunately, this was not as smooth as the first one.
Oh, shame.
I
Okay.
had I had difficult tenants with this one. So the first one I rented through the caretaker was also
Yes.
an agent, but I didn't know
Mm-hmm.
at the time. So we left the
Oh, that's a
key.
great shame.
He gets me a tenant, and he sent me a lease agreement, which I signed, and the tenant signed. And it was going okay for the first 2 months. Then the third month, I'm not getting my cash. Then the next thing, he deposits a check, which is a bad check,
Oh, no.
only to realize that he had convinced the tenant to pay him,
Oh, my.
but then he was not remitting the money. So that is
Mm-hmm.
something that you need to look out as an investor. Make sure the money comes direct to you. Even if you
Ooh,
have a property agent engaged, always make sure the cash comes direct to you.
absolutely. That's a
I know
very
the
good tip.
property agents like to receive the money before, but as much as possible, let them give you your money and they can invoice you for their fee.
Hmm. It's much better that way. And
It's
so, how
it's
did you
much
resolve
better
that? Did
that
you
way.
get him out? Did you evict the tenant?
Yeah, so I evicted the tenant. I got a second one. Then we are going okay for a year. Then issues start again. He's having drama at home, and again he leaves. And I get the third one. We are
Mm-hmm.
going okay. Then towards the second year, he loses his job. He doesn't say. He starts stories. You know, those people who start telling you there's a check I'm expecting, there's a check I'm
Oh
expecting.
no.
The check never comes through. So for the whole of last year, he did try to pay up. He paid
Mm-hmm.
up to January, but I would say I didn't make any income from that property, from the second
Mm-hmm.
property last year.
Mm-hmm. Mm-hmm.
But partly was
Wow.
also my decision because during COVID, and I looked at it and I said, okay, I could kick the person out, but
Yes.
on humanitarian grounds, even if I kick them out, chances of me getting a new tenant at this time are very low. And where am I
Mm.
kicking them out to? This person has
That's
already lost
true.
their income.
Yeah.
And because they are not destroying my property, I'm going to consider it, I've given them housing. He has since left, and I've gotten a new tenant. And now I have also decided what I should have
Yeah.
done in 2018 to go the high yield route.
Okay. Yes. Finally.
So that is where I am on my investment journey.
Yes.
What I would say is that when you have the higher end apartments,
Mm.
it is not the same as the low end.
Mm-hmm.
The apartment that gives me the $270 a month,
Mm-hmm.
it gives me a small income, but I have less headache. And the
Mm.
reason is the people who rent those ones, they don't have problems paying.
Mm-hmm.
And those apartments that are priced, they are up to about $400. Those are
Mm-hmm.
apartments that even someone who is doing a small business, they can comfortably afford it.
Mm-hmm.
When you
Mm-hmm.
move to the higher end where you start charging $600, $700 a month,
Mm.
it means that your customers are the employed. And
Yes.
unfortunately for us employed, we don't always
Yes.
have our finances under control. Sometimes we have
Uh-huh.
eaten more than we can chew. We have taken too much loans. We are struggling. Sometimes we lose our jobs.
That is
Sometimes also because
interesting.
we are highly paid, we are at risk of losing our job when the job cuts
Yes.
come because the company
Mm-hmm.
can see you're a big cost to them.
Mm-hmm.
So that is one thing I have noted. The tenants on the lower end, they tend to
Mm-hmm.
be payers because these are people, even if they lose their job, the rent is not as big for them. They don't struggle as much to raise
They
that
don't
amount.
struggle. Yeah.
On
Yeah.
the high end, they struggle.
Yeah.
Mm.
Wow, that's a really insightful thing. I wouldn't actually imagine that that's the case. The way you would think that it's people who are in a job who you know can be able to pay their rent. But I suppose COVID has changed things around a little bit, isn't it? Like you've seen, even organizations are closing. I know in the country, in Kenya, there's been a huge economic downturn when it comes to big corporations, big organizations. You're seeing them closing up, big companies closing up and moving shop overseas and that type of thing, international conglomerates. So it's really, I think it's happening in a lot of African countries, truth be told. So
Mm.
when you're in an up market, that's why we always talk about the high yield model, isn't it? Because you're in that market area, you can actually get international clients, even locals who are coming in from abroad in the diaspora, who can be able to, pay you. Like imagine your. I'm even going to hazard a guess, by the way. Even your property in Syokimau, given that it's actually close to the airport. There are people who come who are in transit and they need a place to stay. It's quite interesting that area, we're seeing a lot of people putting up properties in that area who are mainly targeting transit clients, transit passengers, and especially because they can then get the Nairobi airport is really quite a hub for a lot
Mm.
of Africa. I mean, fine, we're rivaled by Ethiopia, I think, but in some big locations, but it's quite a hub in that sense. So we're doing the maths, by the way. Why? What was the major reason for deciding to now go with a high yield model? And I feel like maybe we can circle back to this at the end because I'd love to hear about your other investments actually before we move into the discussion on the high yield. Yeah.
Okay, so after buying the apartments and being part of the residential associations, those of you who have been in those association WhatsApp groups know how it is. They are always fighting.
They're always fighting, yeah.
And I was surprised today. I saw an article regarding the condo that collapsed in the US, and they were saying the infighting between resident association leads to disrepair. And I said, oh, so it's not a Kenyan thing.
Are
Because
you
we have a
serious?
lot of fights in those groups.
A lot of fights. Oh my. And people are fighting about, they need to pay more, like they've been asked to pay some things for repair and they're pushing back. Is that the main fight?
Yes. You
Okay,
have
okay.
people who refuse to pay service charge. And of course, if
Wow.
one person doesn't pay service charge, it means the rest of you have to find ways to pay the caretakers, to pay the common bills.
Yes, yes.
And
Wow.
there are those ones also who who are just uncooperative.
Wow.
They won't even they won't stick to the rules that are set. And
Yes.
these estates operate on condition that you guys can maintain it at a good standard. So your property doesn't lose value
Yes.
and you can still be able to command a decent rent.
Yes.
So when there is a lot of conflict in those resident association, the estate starts becoming run down because there is
Yes.
no money to maintain if some people decide that they are not paying
Uh-huh.
and you start cutting on stuff, you start doing all these things, and in the
Uh-huh.
end, it's you as the owners who get hurt because tenants can always move out. You
Mm-hmm.
as the owner with the asset is you are stuck with it.
Yeah.
So my third investment is
Mm-hmm.
now this one I have done construction for myself,
Oh, wow.
and
Yeah, tell us
I
more
don't
about that.
own the land because I couldn't afford the land. So
Okay.
I don't know, some of you may be familiar with the arrangement where you lease the land and you put up houses. Some people put
Yes.
the tin houses.
Yeah.
Some people put wooden ones. Now we
Mm-hmm.
have stone houses. For me, I did
Mm-hmm.
stone houses. I did bed
Mm-hmm.
sitters.
Mm-hmm.
And that is where I am. Now I say I have a lot of respect for anyone who has undertaken a construction project because I know it is not easy. It is not just about the money, it is about the being able to manage the process and coming out the other end with a solid structure that is
Absolutely.
generating.
That is interesting. Yeah. A solid structure that's generating because how long did it take you? So tell us about you leased the property. How big is it actually? Is it half an acre, quarter?
No,
Mm-hmm.
it is a very small, it's probably an eighth.
An eighth. Okay, okay. And then you put up 20 units, studio units.
Yes.
Okay, okay. And those are bed sits. And how long did you so you mentioned not you said with the land you weren't able to afford the land, you opted to lease. So what's your lease arrangement? Is it like you lease for a number of years and are you paying monthly? I mean, sorry, annually?
So the lease is from 14 years, some of them are 15,
Okay.
some of them 16. It depends. It
Yes.
depends on how you negotiate with the owner and also the
Mm-hmm.
size of the land and the
Mm-hmm.
location.
Okay.
I've seen people get leases for even 20 years, and the
Wow.
price also varies based on the
Yes.
location and all.
Mm-hmm.
So once you sign the lease, they normally give you a grace period of about
Mm-hmm.
6 months for you to do construction.
Okay.
You might be lucky to complete the construction within that time if you're not
Mm-hmm.
doing like serious. If you're doing like the tin houses, those ones you might be able to complete within 6 months, but
Okay.
the others will take you maybe a year. And again,
Yes.
it also depends on how your cash flow is and how your construction process
Yes.
goes, how
Yeah.
good your contractor is, how fast they work.
Yeah.
And then the lease payments with my landlady, I'm doing quarterly. So
Yes.
we have agreed the amount per month, but I pay her a
Mm-hmm.
quarter in advance.
Oh, great. That's awesome. And that's a very
Mm.
interesting, like, how did you get to find out about the lease arrangement idea and what, as in what led you to think of that idea?
So one of our friends had leases
Mm-hmm.
and she had about 3 properties. So the first one, she had tin houses. Actually, I think for all her properties, she had tin houses. And she's very talkative and comes home and says, oh, I have leases. I'm making so much money. And we get curious. First, we are hesitant because the location is not a place that we are very familiar with.
Yes.
But then she's happy and willing to take us there.
Mm-hmm.
So at first, my friend took the lease.
Mm-hmm.
My friend who took care of my second investment on my behalf. So I
Mm-hmm.
told him, you go ahead first. We see. You share the experience, and then I will come. And I will tell you, it's quite a process.
Mm-hmm.
we talk of due diligence when you're doing mortgage, when you're buying houses, but this one you even have to do extra due diligence
Wow.
because the challenge with these leases is that some of them they still have succession disputes.
Oh, really? Uh-huh.
Some of them they don't have, if they don't have a succession dispute, you find that they're still operating on the mother title. They haven't subdivided the land.
Yes.
So that is one thing that as an investor going in, you need to be careful. You need to make sure that they can provide the title for the land which they are purporting to lease to you,
Yeah.
and do the search for yourself at the land registry, confirm
Mm-hmm.
it is indeed their land, confirm
Mm-hmm.
there is no caveat, there are no ongoing cases on
Mm-hmm.
ownership, and
Mm-hmm.
then only then you proceed to sign the lease. This is
Okay.
because leases are lucrative to these people,
Uh-huh.
and there are so many brokers around it. As with anything with land when
Oh,
it comes to
wow.
Kenya,
Yes.
this one you have to be extra careful. Yes, you're not buying, and the more you should be careful because you're going to put your money on a property that you do not own.
Absolutely.
So
I
you better
understand.
at
So
least
very,
know who is the real owner
yes.
before you commit your cash into it.
Yes.
So, other than that, then you start the construction process. I was lucky, I got a very good contractor.
Mm-hmm.
He's super fast
Mm-hmm.
on condition that you have the money ready. Because what
Yeah.
he explained to me at the beginning is that the process of mobilizing the team to the site takes a bit of time.
Yes.
So the moment you're struggling with cash and the team has to leave the site,
Yes.
that stalls your project for so long. And the longer the
Wow.
project goes on, the higher the cost.
Of course.
Because anyone who's done construction, the materials, the prices are always going up. The labor is also going up. And sometimes when it's not going up, sometimes you struggle to find them, depending on how many projects are in an area. Because with construction, you don't want people coming from so far. Most of the time, you have the labor coming from just within the area.
Mm.
So if you lose them to other sites, the chances of getting them back is normally difficult. What I liked about my contractor is that with the timing, and for him, the teams that he works with, he
Oh, that's
starts work
great.
at 7.
Wow, that is
7
unusual.
a.m. they are on the site. And
Wow.
he's very strict.
Mm-hmm.
If you're not on the site at 7, you're not working that day.
Mm-hmm. Ah, that sounds like a
Because
very good
remember, this is
contractor.
a daily engagement. So at 7, sometimes I would be receiving photos at like 10 a.m. Dubai time, which is 9 in Kenya. And if it's a day they are doing slabbing, I can already see the equipment. They are busy pouring the concrete. It's 9 a.m. The concrete has been mixed. It's being poured already.
Then that's amazing. I mean, this is something that everyone who goes into construction can attest. Getting the right contractor is such a nightmare. And a lot of
Mm,
people in the diaspora have done investments. They've done, they've done construction and then regretted it and wish they had never ever started because of that process.
mm.
Maybe they got a recommendation from the wrong person. How did you actually come across your contractor? Just as a tip for others.
So I got this contractor through the architect. So I had met
Aha.
another contractor who we were considering doing a turnkey where he would finance me and then I would be paying.
Okay.
But then when he did the survey and all, he brought a lot of conditions, which I felt
Uh-huh.
were excessive and I couldn't really
Mm-hmm.
handle it. So,
Yes.
because he has not done that kind of project, he has not done construction in a lease setting, because that is
Okay.
also something else. Because the way you
Yes.
navigate the approvals for those leases and the way you navigate approvals for a high-end project is very different. He's a good
I see.
contractor. He
Yes.
has developed some flats for my friends.
Yes.
Just that this kind of arrangement, the lease arrangement, he was not familiar with it.
Mm-hmm.
So
And
he
that
was
it
imposing
raises
a
a
lot
great
of
point.
conditions on us.
Yeah. You need to have someone who has experience with the actual job. It's great to get good referrals because you obviously got good referrals, even with this previous one and this current one, from people who've done it before, who've been able to work effectively with a contractor and see results. I think the worst thing, and I always say our biggest mistake when we first started was using a contractor that was recommended to us by our gardener. I mean, it's like we're already doomed from the start because the guy, after he's received about 50% of his payment, stopped responding. So he kept saying, no, we need more so that we can finish the work, and ended up never finishing the work. I mean, thankfully it was a project which was it was like a house, a little outhouse, I think, at the back of the property. Not outhouse, let me say an extra cottage room, an extra room actually at the back of our property. Yeah. So I love that. I love your tips. It's that, use someone who's trustworthy, and definitely get a good recommendation, and have a clear contract with this person. Of course, your architect as well. I suppose you got your architect contact as well through your friends, is it?
Yes. So the
Mm-hmm.
architect is the one who connected us to the contractor. The contractor has done some projects for him and his friends, and
Yes.
they actually took us to see those projects. So at
Uh-huh.
least we saw the kind of work that he has done
That's
and
excellent.
all.
Yeah, Catherine is asking if you share the contacts of the contractor, and I think it should be possible. We'll get the contacts from Sally and connect you to the contractor should you want. This is actually the reason why part of what we do, just to really plug that in there, is that we get reputable people who have worked with Diaspora in the past, whether us or our clients, and we bring them to you and say, look, these are people you can use, and that we absolutely stand behind them. So one of the things we want to do during the course of this show is just bring on reputable people who can answer questions for you, who can give you information. I really like that idea you mentioned about a turnkey contractor who will land and say he's going to build on it, and then you pay him back, like they finance it in advance. Maybe they have a good arrangement with the bank, and then you pay down slowly. And that's a really great idea for a lot of people who might have land and they want to develop, and maybe it's in a good area that will produce a good income, but they are stuck at the part of getting financing or getting started. So I really like that idea because you split the cost. You actually, no, you spread the risk, by having a
Yeah.
contractor who's building, and you kind of spread the risk as well. Yeah. So yeah, go ahead, Sally. These are really great tips, and thanks for the question you asked, Catherine.
Thank you. So the other thing is with contractors, and this my friend had told me, he's done quite a bit of construction, is
Mm-hmm.
like Jackie mentioned, your contractor, you give him the money up front.
Mm-hmm.
Now, there are different kinds of contracts that you can sign with a contractor. You can go on a labor contract.
Yes.
Now, a labor contract is where you pay them for their labor. So you buy all the material, you pay for their other labor, and you pay them for their skills. So they will tell you, like at the beginning of the week, they'll give you a BOQ with the cost and all, and you will give them the money at that time. They will buy the material, they'll provision for the labor, and they will include their cost in there. And that is the arrangement I went with for my contractor. So he had
Okay.
his fee, and then there was the supervisor's fee because he works with a supervisor since he has several projects. So he will have a supervisor in your project who is there full time. He
Mm-hmm.
will be going round.
Mm-hmm.
And also, he'll also be going around negotiating materials that are needed. So at the end of every week, he would give us a quotation and tell us, next week we will be doing roofing. This is what we need. As
Mm-hmm.
we do roofing for this one, we will also be putting those for this one.
Yeah.
So how the project was able to move fast, because it was really fast, is because he didn't wait when, instead of waiting to complete all the walling until the roof, When he finished the first floor and moved to the second floor, as he was doing the walling for the second floor, he was putting finishing touches on the ground floor, such that by
Wow.
the time he got to the roof, the ground floor would be ready. It's just remaining paint. It has doors, it has the fittings are
Wow.
there. So
Yeah.
that is how you do things concurrently. But the way to do the things concurrently, that means you need to have, because you're funding the top floor that is still being walled, and you're also funding the finishing.
Yeah.
It is not a must that you do that, but if you can do it, it saves you time.
Yeah.
It's more efficient, but I agree because everyone has their own demands on the cash.
Yeah.
You may
Everyone
just
does. Yeah.
prefer to just finish all the walling and then come later to do the finishing. It also works. The other kind of contract is the turnkey that I mentioned, where you agree with the contractor, he provides you either part or full financing and then you repay. I'm not very familiar with the kind of rates they charge for that, how much the margin, because some of them will put a margin. So they will say maybe the total cost of the project is 10 million, they'll put a margin of maybe 2 million. I haven't done one. The one that was proposing a turnkey, we never got to negotiate the commercials. But I do know for some of them, they will put a margin, some of them, it will be an interest of sorts because
Yeah.
it's their money at the end of the day. So there is the labor contract, there is the turnkey, and there's also the other one where you do progress billing,
Yes.
where you give the contractor the money ahead of time, they will work, you assess the work, and you determine, okay, we need to pay the next one. I am not quite sure we have gotten to the point where we have contractors where you can trust them with the cash upfront. I have not come across such as
Yes. It's
yet.
difficult. Yeah.
Maybe they are there, but for me, I think I prefer where we do a labor contract. I know I bought 600 bags of cement and your labor was maybe 2% of the cost of that phase.
Okay, that's good to know. I mean, the different types of contract are definitely useful to know. You know, when so it means when you're working out, when he comes up with the bills of quantities, he's outlining this is the number of this that's needed, and this is the cost, and you can even counter check that cost. Do you find
Yes.
sometimes that some contractors will then also they'll increase the amount of materials, and yet they know the full, maybe increase it by 25%? This is now where it means it's useful to have someone who's honest, right? On the ground, do you also have someone
Yes.
who's watching out, like on your own representative, who's on site, in addition to the contractor
Yes,
and
you
and the
still have to
supervisor?
audit the quotations. You cannot just take the quotation as they give it to you.
Yeah.
Sometimes you also have to push them back to negotiate because sometimes they are hesitant to negotiate. They don't negotiate the best they could have gotten.
Yeah,
So if you
that's
don't
true.
push back, you might end up paying a premium where you could have gotten a discount.
Yes, because of
So it
even
is important
quantity.
that you have someone who can actually see where the work is, can confirm that that is the phase they are at, and can question those quantities as well.
Okay. Okay.
Mm.
No, that's really good. That's great insights and info. And you bootstrapped this as well, isn't it? I mean, you basically paid all this as you proceed. Did you get financing for it?
I got financing, but it's an indirect financing again. So I took a
Okay.
personal loan
Okay.
to complete it.
Yes. That's great.
So to
Yeah.
start, I would say I had about 50%.
Okay. Of the cost of the construction.
50% of the
Yeah.
funds. It's important at least you have about 40-50% before starting a construction project, which goes again to that issue of us avoiding to stall. So at least if you
Yes.
have 40 will push you to a good stage.
Yes, yes. And I like what you're saying. I mean, somehow, well, I think looking at the approach you've taken, you have used your savings, but you've also used like finance, but it's not
Mm.
finance that is all unsecured, isn't it? Most of it, other than apart from your
Mm.
mortgage. So all the finance is unsecured in the sense of, and nowadays, by the way, a lot of people can actually get unsecured loans. This is the thing. In Kenya, I know in a lot of countries, you can get $50,000, $60,000 equivalent unsecured funding, unsecured financing, even in foreign currency. There's banks that are currently offering unsecured financing at maybe 9%, 10% interest rate, which is really good, guys. So if this is something that you're really keen on getting started with, and this is, we're really happy to just bring on a few banks to discuss this, but also just reach out and let's share with you. Like I mentioned, one thing we do is just provide a free call to you to just help you figure out what are the options. I do this because, look, we've helped each other, like now by interacting with Sally and knowing that, yes, we're going to help you get your high yield financing on track. But just by learning from what you've done with construction, number one, I never ever recommend that people start their first investment with construction. You did already have 2 properties that you had started with. So you're already like well versed, you are starting to, construction can come in the second and a third project, isn't it? And by then you're not green, you know how you kind of have an idea of how the real estate market works. You can actually select a location which is going to bring you a good return for whether it's the low income or mid income or high yield kind of models. You're more well versed, and then after that, you bring in the reputable people, and that's the trick. So again, like I said, you want to bring in lawyers, bankers, architects. These are all people that you really need to have on your side, isn't it? Like people who are just good, who are honest, who do the work. It is difficult. I think in a lot of Africa, I'm telling you, from Nigeria, where I'm currently based, to Kenya, to Zimbabwe, you name it, South Africa, just getting trustworthy people is something that we just have to work harder with, and they're really there. They're there. Sally is a great example of exactly how possible this is, from what she shared with all of us today. And not that, I mean, Sally, you've told us that your procedure, your process that you've done by getting these unsecured loans, you've been able to really stretch out the what do you call it? Your capacity in order to just, of course, you need to be able to pay back these loans every month, right? But the money, the properties are giving you finance as well, isn't it? They're giving you cash flow to be able to pay back. Yeah. So tell us then a bit about the high yield. I mean, we've got a few more minutes, and I see thanks so much. We have Dr. Sonrono sharing. That's inspirational. How did you get the building approvals considering that the land is leased, and what happens to the property at the end of the lease? That's a great question. I think it would be great to maybe, Sally, do you want to respond to that real quick?
Yes, I can respond. So to get the building approvals, the water connection, the electricity, you have to work with the landowner because they have to give you the title documents, and then you use those ones to get the approvals and the connections for water and electricity. And at the end of the lease, yes, the houses go with the owner of the land. That is why you don't do very serious houses. That's why most people prefer to do the tin houses. But it's also a question of the return.
Yes.
The return that you're looking at, because I could have done tin houses, but the question is how much income would it have given me based on the location? Because that location is quite prime. I would have done tin houses, but it may not, given the lease amount, because of the location being prime, the lease amount is also a bit higher compared to other places where people are doing most of the tin houses. And the customers are also moving away from the tin houses. It's reducing because they're not exactly the best houses. And because of the noise and there's a preference for people to stay, even if it's a single room, at least it's a stone wall.
A stone wall. And tin houses, you'd be limited. You wouldn't be able to put stories, right? You'd just be limited.
There's a way to do the story with the tin houses using steel.
I see. Very
So you
interesting.
do steel, and then
Yeah.
for the floor
Yeah.
you do a mini slab. We
Yeah.
have a contractor, maybe they can help us with the structural stuff,
Oh,
but
that's
how you
interesting.
do it is the steel structure, and you have a small slab for the floor, and you continue with the
Hmm.
tin on top.
I see. This is great, and this is a great discussion because I see some people that also are using what are they called? The containers, the shipping containers. The good thing
Ye-
about the shipping container is you can up and move the house, depending on how
Yes,
elaborate. Mm,
actually, that is something that I got to know the other day about.
okay.
But the containers is not so much for the residential houses.
Mm-hmm.
It's for commercial property.
I see.
So again, with the leases, you've probably seen a lot of shops which are housed in those shipping containers.
Yes, that's
And
true.
the truth is, most of the people don't own the land on which those containers sit. So you can lease the land, you don't do any construction, you buy containers. If it is a prime property, make it all commercial, subdivide them into shops and rent. The
Okay.
advantage with the container is that if you have a disagreement with the owner of the land, you can pack them and go.
It's so interesting the things that you can do with property these days. I know, yes, exactly. For residential, I mean, you'd have to consider because of the steel heats up and everything. Have to consider some sort of insulation, maybe interior cooling, but it makes a lot of sense for commercial properties for sure.
Mm.
Yeah, and there was one more question from Catherine. She's asking, I'm wondering if you're required to get construction approval from the county government, or is the project too small for such an activity?
You have to get approval.
Mm-hmm.
I'm not sure there's a project that is too small, and Sylvester is a contractor. He can confirm that for us, maybe on the chat. But I know the moment you start a construction, even if it's a pit latrine, you will get the council people coming around to ask if you have a permit.
Mm-hmm. Yes, it's important. By the way, this is something about doing business anywhere. You always want to make sure you're ahead or in front of the law or on the right side of the law. It doesn't
Mm,
cost you much, but you know what? When you're caught up with and you've not been on the right side of the law, it's going to cost you a lot because of fines and penalties. So this is something we always tell our clients: just do it. It's not costly. It might take time, but that's why I think that that period, grace period, always matters. And with
mm.
any construction you do, just make sure you are on the right side, really. Otherwise, you're the one who ends up actually losing out. So follow up with your contractor. Yeah, and that's great. I think we can definitely bring in some in the construction industry from the architects and contractors to just speak to us some more about that procedure. And
Mm.
a word of caution again is, do not start your first investment with a construction. Please, 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 just have some kind of have an initial investment which is lighter. This is the thing. I don't know if you agree, Sally, but no matter, most people I know, the minute that they've done their first construction, and I recently talked to a friend of mine who's worked for many years as she worked as a loan officer before she left, and became a stay-at-home mom. She worked for as a loan officer for one of the big banks. uh,
Mm.
it's an international bank, and she said she always people who got a loan would always come back to buy a second property. Yeah, and I don't know if Sally you'd agree with that. Like, generally, the minute you get started, the first thing, the hardest thing is normally getting started, isn't it, with the first property? Would you say?
Yes.
Yeah.
Yes,
Yeah.
property is addictive because even the people who have done construction, when you finish one, you want to do another one.
Oh, you want to do another one? So are you now
You
looking?
want
You're also looking around to see, okay, what's the next one? Maybe a commercial one. That is so cool. Yeah.
It does. The first one is the hardest, but once you get through with the first one, then it becomes easier because you have also learned. If you go through a mortgage the first time, then you already
Yes.
know what is required, where
Yes.
you can even predict what they will be asking for next.
Yes. Exactly.
The other thing I'd like to tell people, when you're buying your first property,
Hmm.
you're not buying your dream house.
Mm-hmm.
And the reason I say you're not buying your dream house, we all have different tastes. If you have decided that you're buying a property that you want to use as an investment, it is important that you keep your taste out. It's not easy. I struggled with it, and I have to keep reminding myself anytime I see a house I like, I tell myself, I am not buying for Sally. Because if you buy, you could buy, I'll give you an example. You could go to Green Park on Mombasa Road. They have very beautiful houses.
Mm-hmm.
And to be honest with you, it's a place I could buy to live. But the
Yeah, it's
question
similar
is,
to a lot of Sandton developments in like Johannesburg, isn't it? Like these
yes, can
large
that
plans. Yeah. Mm-hmm.
can that house, if I'm taking it on a mortgage, is that a house that I would be able to rent out for an amount to cover the mortgage? If the answer is no for me and it is my first property, I am not going for it.
Mm-hmm.
Because we never know. Today you have a job, you might lose the income, you might get something. Your cash is, anything can happen. So you need at least to be in a position where if the worst comes to the worst and you
Mm-hmm.
have to rent out this property, you know it can pay for itself.
Absolutely.
Because you can buy a dream
Absolutely.
house with very good value, but the rental income is really bad. It cannot support itself. And if you
Mm-hmm.
run into issues, then you're stuck with a property, you're struggling to sell it. If you rent it, it is not giving you enough income to pay it. So as much as we are putting our dreams into the property, remember you're buying a property for business. Location is key. Look at what the tenants are looking for.
Yeah.
What would a tenant want? What you would want in your kitchen is not necessarily what your tenant wants or needs right now.
Mm-hmm.
So you have to consider that, and so that at least you end up with a property that, you know, if the worst came to the worst, even if you
Yeah.
are living in it, you can always move out and rent it out.
Absolutely. Those are really, really, that's amazing advice. I'm actually just trying to see if I can also share with you guys real quick our our masterclass on just being able to this is Sally Wanjirius, Diaspora investor. We have a masterclass where you can learn more about high yield properties, and I think I'm going to try and put it in the link. I'm going to put it in the comments. Sorry, not comments, but on the description when we're done, where you can click on and just learn more about how to get your investments going high yield using the high yield investment model. Because like what Sally has mentioned, if you get a property and the payments are really high and you end up not being able to keep that up, that's your investment gone. I mean, the banks will foreclose on that, and that's it, unless you can get someone else to buy it off of you. So you want to get something that you're very much assured about getting income. Yes, there's been a downturn in during COVID. We're seeing people maybe getting about 20-30% less than they got before COVID. Some people did have to also like close their properties for a time, maybe 3 months. I think I know of maybe 2 clients also who did close their properties for a time, but now everything is picking back up again, and the local travelers are there. Local travelers will always be there. And I would say a place like Kenya, lots of countries, places like Kenya, like South Africa, Zimbabwe, have lots of local travelers that still want some kind of, they still want some kind of a vacation within their countries. So you can absolutely target those people, whether you're doing it in the city, like what Sally has done, or you're doing it outside of the city, you'll still have travelers coming around. Okay, so Sally, this is really great. I don't know if there's any last thoughts that you want to share with us. We've been going for about an hour, and I think everyone has really learned a lot. Like I said, if you want any help whatsoever, reach out. Now, you might want to start off by watching our masterclass. Our masterclass, you can get it at Real Estate Empire, actually, realestateenpirenow.com. Okay, I'll just put that link right now for you. Real estate. Okay, I'm trying to get the link going. Apologies. But while I do that, maybe Sally, you have any final thoughts, by the way, like that you want to share? What are some of the things? What inspired the start of your journey, and what's one thing you wish you had known before you started?
Coming from Kenya, there's not a lot of investments that we see. And almost every rich person that you see or someone you perceive to be wealthy has property investment. So I would say that is what I was looking for.
Yeah.
Now, being outside the country, I'm also looking for a business that is hands-free.
Yes.
That I don't have to call every day to check the stocks and all. So property ticked those boxes for me. But there are some things I would change. Maybe I would consider going high yield from the start. And I'd probably also consider renting some property for high yield as opposed to investing. Because while property investment is good, you also have to watch out so that you don't end up asset rich and cash poor.
And cash poor.
You can end up with a lot of assets, but when it comes to liquidity, you have no cash. And truth be told, property is not the easiest to divest from. Selling a house is not easy. It takes time. Even when the market is good, it takes time. It's not an asset that you can say, I have an emergency, I need cash, I put it in the market and it's sold tomorrow. No.
Yes.
So as you go into property investment, which I really hope you do, it's a good investment, try to balance it with other investments on the side.
Yes.
You can put some money in the stock market. The stock market back home is not doing very well, but you're in the diaspora, you have access to other stock markets.
Absolutely.
Try to diversify your portfolio. Don't end up with everything in property and then you reach a point where your net worth is very high, but you have no cash to run on. Because at the end of the day, you need cash.
Yeah. Wow. That's great. Those are wonderful tips. Thanks so much. And you know what? We're even benefiting because Sally is an accountant and really looks at the bottom line. She looks at finance. She looks at what is the, inflows and outflows. And I really love that, from your perspective, Sally, you see how high yield makes so much sense. In fact, when we looked at the property that you have, we realized, to make your 1 month rental income, you basically need just about 5 days. 5 days of someone renting your property short term, right? For about $100 a night. And that's it, 5 to 6 days tops. And you get your entire month of rental income. Now, 5 out of 30 days, that's completely doable and completely possible, with the property in the area, because your property is along near the Valley Arcade. It's actually really in a great suburb, isn't it, of the city, and really something that would definitely bring return. I was telling you how whenever we're home, we like to frequent that area a lot. There's that Java house, the coffee house, very famous coffee house there. And there's malls within the area. There's very famous, restaurants. I think there's a Chinese restaurant that a lot of people love to go to. So it's really it's so comfortable. And those are some of the things you look at when you're looking at property. But like I said, thanks so much, Helly, for coming on. And for anyone else who has some questions, wants to know more, wants to explore this, start off by watching our masterclass. That's at www.realestateenempirenow.com. And then reach out, book a call, completely free. I am happy to have this discussion with you to let you know, okay, this is a kind of investment, this is a kind of amount of money you can get pre-approved for based on what you want to repay, and what kind of investment can you get into that with, right? Also, like what Sally has mentioned right now, divesting, being able to not divesting, but being able to diversify your investments as well. That's something that I think it's a comment you made, and we're starting to really notice that is, as diaspora, we need to be better money managers. So wanting to bring in more information about how do we manage our money better? How do we choose investments wisely? So look forward to you just, continuing to be part of our community. Sally, thanks so much for sharing your knowledge. It's power, really. And I think we don't share enough. So I'm so glad that you are open to do that. Not to feel like, oh, I have to hide this knowledge because no. It's because when you share with others, you actually multiply it, isn't it? You multiply your knowledge in a
Yes.
powerful way. Yeah, isn't it?
And I've
Yep.
gotten here from people sharing. I am not in the country to see what is going on, but at least
Imagine.
I was lucky the people around me were willing to share what they are seeing on the market. And for me, what I
Absolutely.
really did is action what they are sharing.
There you go, because there were trustworthy people. And that's it. That's how
Mm.
we started our journey, by someone sharing who was also a diaspora. And then we said, no, it's enough. This is it. No more keeping hoarding information. Let's just put it out there so everyone can also know.
Mm.
Okay, great. Well, awesome. I think we can call it a day in that case. You guys, thanks so much for being part of this live stream, and we'll be coming back at you very soon in the next few days. Just put any comments if this was your replay. If you're watching on the replay, put any comments and we'll also get back to you. Okay? Thanks, everyone. I need to find out where to end the stream from. It's always,
Thank you
this
very
is a new.
much.
Yeah, most welcome. Thanks,